Hi everyone, hope you're all doing well. Today I'm going to do 7 stock updates, so it's going to be a big jam-packed video, and today I'm going to talk about, there's been a lot of news in the last 2 days and we're getting back to some proper stock market videos, and I'm going to talk about a lot of stocks that have been making moves in the last 48 hours. Some stocks I own, some stocks I don't own, so for you guys that like a lot of stocks in one video, today's one of those videos for you guys. Hope you enjoy it, hit the like button if you're new around here, subscribe. Let's get started. So just a quick little shout out again, I failed on it to post a pinned comment last time, I'll try do it this time. At the moment, I got an offer through from Webull. It's not the platform I use. As you guys know, I'm a Trading 212 fan, but if you do want to get some free money, some free shares, they are doing a good offer at the moment. So if you do want to just sign up and get the offer and take it, there you go, guys. At the moment, they are doing a promotion from the 19th of October to the 7th of November, which could potentially get you up to $9,000 in free fractional shares. There's 2 tiers. Tier 1 where you deposit £100 and you get 5 free shares, and if you keep it in there for 90 days, you get another 5 free shares. There's tier 2 where if you do a 2,000 deposit, you'll get 15 free fractional shares, and if you keep a balance of £2,000 for 90 days, you'll then get another 15 free fractional shares, which for doing nothing is a pretty good offer in my opinion, even if you don't go on to use the platform. So it's there if you want to take it, guys. It'll be the pinned comment in today's video. But let's get on to some proper stocks, starting off with Evolution. They brought out their interim results the other day and they were amazing, really good results, and the stock reacted positively to that. The stock is up 12% in the last 5 days, and on the day itself it was up a little bit more. It was up around 13-14%, so a pretty good day there. But I just can't believe how cheap this stock had got to. I mean, the fact that this was down 11%, well, it still is down 11% year to date. Before the jump that we had, the stock was actually down 20% year to date, which was just unbelievable. 18 times earnings, it was actually down at 16 times earnings, and a 2% dividend yield, 2.8% dividend yield. That was actually 3% dividend yield before the jump yesterday. For a quality business like Evolution was just absolutely scary how it's getting to them sort of levels. They are an online provider of games for the likes of DraftKings, for example, FanDuel. So they have really good growth in the likes of China, and obviously great growth drivers in the US that we've talked many times before with the likes of DraftKings, but at a very good valuation. And in Q3, very good numbers they've just brought out. So look at this, operating revenue increased by 27%. A 27% growth company. I mean, if we do look from January to September, it's a little higher in Q3 because of the seasonality. But even if we look over the 9-month period, the revenue was up 20%. You should not be getting a 16 times earning business with a 3% dividend yield. You know, you see that you've even got a dividend to keep you warm while you're waiting for the share price return. You shouldn't be getting a 16 times earnings company that's growing at 20%. And the scary thing as well is like the profitability is being dragged up at a very good rate as well. So it's actually 15 times forward earnings. And if we actually looked at where it was before the jump yesterday, we actually had Evolution at like 13 times forward earnings. You should not be getting a company that's growing 20% at 13 forward times earnings. That's just criminal. And we also saw the EBITDA increase by 30% as well, which is very good news. I just can't believe we had Evolution at these sort of levels at 13 4 times earnings for the numbers they do and the dividend you get. It's very impressive, very impressive. And yeah, I've been buying shares in this one quite a bit, and I even look at it now going, I probably should have even bought even more. So yeah, I'm back about 4% down on the position here, so I don't know if I'll be as aggressive to buy the stock. Now it's had the jump, I'll see if it gives it all back, which could happen, and then I might buy more. But even if I didn't own shares right now, I'd still think this is, you know, quite an attractive valuation for this company with these sort of numbers. SoFi, the run continues once again. Very good day yesterday. The stock was up nearly 5%. It was up a little bit more than that. Today in pre-market is up 1.8%. Sorry, it's just jumped. Look at that. It's up now 3.8%. I don't know if there's some news coming out potentially that is causing the stock to rally up again. I haven't found anything just yet from what I've searched, but it's still continuing the run. And are we going to see SoFi come a 100% return member this year? I hope it does. Any of you guys that own shares in this one, you're doing really well. I'm up over 60% on my position now, which is obviously really good. It's been a really good performer for me at the moment, and I just think people are just getting a lot more bullish on SoFi. I think they're realizing now that they're on the verge of 4 quarters of consecutive profitability with still very good growth, and we're seeing just, you know, more and more people turning positive on it. You know, I go on Seeking Alpha and the analyst articles, and you just look down the list and it's just all like buys. I mean, there's a couple of holes, but strong buys. And it just didn't used to have this. I mean, there's nothing really changed with the business. The business has been executing amazingly over the last couple of years, but it's just amazing how sentiment can change around the stock and people do something go, actually, you know what, it's a good stock. So yeah, that continues on its rally. Another stock that is creating a lot of headlines, potentially not for the right reason, is Boohoo, the classic saying that Boohoo is named after the noise that a lot of their shareholders make. Boohoo Group, yeah, it's been a volatile one at the moment. The stock is up and down like a yo-yo. Even today, the stock is actually up a fair amount. And the drama between Fraser's Group and Mike Ashley and Boohoo continues. Fraser's put out an open letter basically criticising Boohoo. Boohoo have now responded and said, like, Mike Ashley is being unfair, especially with some of his demands. It's just all a bit messy. And this is what happens when, I guess, you've got a very controversial figure buying into the stock and people are unsure on what his pretensions could be, his plans could be as a shareholder, and obviously as he wants to be the CEO of this business as well, what potentially his plans could be. And obviously you got Boohoo, which basically seems to get caught up in so many dramas. You know, I would say that lightning doesn't strike twice in the same place, but I mean, it's like a Revolution Beauty Part 2 all over again, and they just seem to get in some messy debates. And it just comes back down to, you know, you got Boohoo's management team that are just inadequate. So you've got two different management teams here. You've got a Boohoo management team that are inadequate and awful at the job. And then you've got such a controversial figure in Mike Ashley getting involved. It's just a recipe for drama, isn't it? And that's what's happening right now. And I just got to say, I'm just glad I'm not involved with this one anymore, having any shares in it, because it's a mess. Tesla had a very, very good day yesterday. The stock was up 21%. I think it was the best day the stock has had for 10 years, I believe it is. It was a very, very good day. Stock was rallying up massively. I would expect to give some of it back in the next kind of couple of days, but anyone that was a Tesla shareholder yesterday, I'm sure they were looking at their account and going, hey, look at this. But I guess it was kind of needed, because obviously year to date it has now turned positive. It's up 4%, so still underperforming the S&P 500, and I guess that's the story for like the last couple of years, I guess, with Tesla, is that it's really since 2020, the last kind of 4 years have been a bit underperformance, stagnant money, and underperforming the S&P 500, unless you were able to perfectly time it and buy it at the right opportunities. But there'll be a lot of people that haven't really done that, so it would have been a nice day for them. Looking at Tesla's earnings, I thought they were actually the best they've done for a while. I would say it's probably the best I've seen Tesla done for maybe around about a year and a half. EPS was a beat by 0.12%. The revenue did miss by about 500 million or 490 million, but they did go back to some okay growth at 7.8%. I still don't think this growth is good enough for a 104 times earnings business. I think you need to be seeing a very big amount of growth for that sort of figure, but it was a step in the right direction. And if you went through the numbers were a little bit better. Obviously, automotive revenues were still very, very weak. That's a concern when it does make up a good chunk of your money. But energy generation storage revenue continues to do very well. Good growth there. Services and other revenue was still very good. What was also very good from Tesla, and this has been my big criticism of them in like the last kind of 12 months, is operating expenses came down. So they seems to be getting a bit under control on the expensive side. That's something that you want to see when a company is struggling. You don't want to see them continue to spend absolutely massively, which Tesla have been doing. So they have started to get that under control. Adjusted EBIT was up 24% as well, which is probably worth pointing out. So these numbers were a lot better than what they have been posting, and I would say that these are good numbers. The only issue that you have with Tesla is that next year the company is forecast to grow at 15%, and the EPS is expected to go up a little bit at the moment, but I still struggle with the valuation. I still think that when you are kind of, 104 forward times earnings, you do want more growth in this. And the only thing now that it comes down to Tesla is that, and that's how Elon Musk really got the stock price up the other day, and how it was up 21%, is that you've got to believe what they say they're going to do. A lot of what's priced into Tesla at the moment is products that are generating no revenue and no profitability. If you're buying this at these sort of levels and you're holding it at these sort of levels, you believe that what they have in the pipeline will come true. You will believe that the self-driving cars will be successful, which obviously, that's been a story for the last kind of 4 years, and every year we hear it's going to be next year and it never comes true. You got to believe the Optimus would be a very big success, and if this all comes very true, I think Tesla shareholders will do very well from here, and that's why I personally wouldn't back against someone like Tesla. Someone always says like, well, if you have this negative view on these stocks, why don't you short it? And I would not really go against a company like this, because if you get it wrong, it's gonna get you're gonna get absolutely stung. And someone like an Elon Musk, you'd maybe believe that if anyone's gonna do it, it is gonna be someone like himself. But the problem is that when you start talking about that you are buying this stock at 104 forward times earnings, and you're not buying it for today's financials, no way you can justify the price on today's financials. You're buying it on what potentially could come from the future of this stock, and you are buying it because of the future products that don't create anything for the business, which is, you're not investing then. You're not saying, well, they've got this revenue here, and if they keep selling it up here and they have all these self-driving cars, and it generates $3,000 for each self-driving car, and they have X amount of cars, or they've got these amount of robots, and if they sell this amount of robots, this is how much they could generate. That's investing. You're trying to predict what potentially these figures could get to. At the moment, we're speculating. When you're buying Tesla at the moment, it's all speculation that they do get full self-driving available. They do sell Optimus in a certain amount of year. There's a lot of speculation, and for me, that's just not investing. That's not investing, it's gambling. And you could gamble, but I would say you would be gambling a very small amount. But I see so many times people gambling and they've got like 40% of the portfolio in this, and hey, you know what? Some of them might turn around in 3 or 4 years' time, and the gamble paid off, didn't it? But I don't know, if it goes wrong, it'll be a little bit messy. But yeah, that's where Tesla's at the moment. It's the numbers are good. I think the valuation is very rich, and I think the only way that you make money today is if some of the gambles do come successful, and you might look a genius, but at the same time, if it doesn't work out, and we have more delays, you're going to have an egg on your face like it has been for the last kind of 3 or 4 years, and that's what happens when the stock is valued at where it is at the moment. Next one, UPS. So UPS is one that I've got to have a look at the moment. This has had a major pullback, down 33%. Nice dividend, 4.7% dividend at the moment. And what made me laugh about the other day is like UPS, and there was like so many downgrades that came out the other day before earnings. I thought, oh, downgrading before earnings after the stock's already down 33% is a risky business. I won't be doing that. And they came out with the numbers, and the numbers were actually okay, and they started moving in the right direction. You start looking at some of the profitability numbers, they started going up in a bit of the right direction. Revenue started going back in the right direction. I don't really like looking at Seeking Alpha numbers or analyst numbers, because they can just move numbers up and down. Like the day before, they move the numbers down and go, hey, look, this company beat earnings. And it's like, well, yeah, you downgraded the guidance massively, and now you're saying it beats. It's not amazing. An example of that is Coca-Cola. Coca-Cola came out with the earnings the other day, and analysts were celebrating like, oh, look at this, the EPS was a beat by 0.02. Oh, the revenue beat by 290 million. This is absolutely amazing. Well, that's only because analysts downgraded the numbers massively. And if you actually look at the numbers themselves, that's where it gets concerning. You got net revenues declining 1%, volume down 1%, operating margin was 21% versus 27%. You look at EPS decline 7%. These are horrible numbers, but you look at analyst numbers and it would look a rosy picture where like, oh, but they're beating on revenue and EPS. Well, yeah, they're beating, but that's only because analysts set the bar so low. You look at actual numbers themselves, they're not great numbers, especially when you're paying once again 23 forward times earnings for this business. I mean, Coca-Cola's never going to be cheap because of the brand it is, but it's not great numbers. And it seems like so many of these are having the issues at the moment. A lot of them hiked up the prices a year ago, and they've kind of pulled that lever now. They've got no more to pull, and we're seeing a bit of a slower, weaker economy where people are just pulling back the spending a little bit, and they're like, well, how do we get our profit revenue up? Because we can't increase our prices because we've just done that massively last year. So yeah, some of these consumer stocks are in a bit of a hard place at the moment. SoFi, they're down around about 4% today as recording this video. In fact, I'll just refresh it because I did this a few hours ago. Oh, the stock is now down 2%, so not too bad at all. They came out with earnings. I actually thought they were okay. If we had a bingo card on stocks, the classic one about the FX impact hurt them massively was once again in play. That is exactly what happened. But after the FX impact, the numbers once again were actually okay. Mobile money subscribers was up 13%. Transaction value increased by 30%. Daily data users up 13%. And if you look here, we also had a revenue growth of 19.9% on constant currency basis. But because of the FX impact, we had a big impact once again on the profit and the EBITDA because of the currency impact. when this currency impact goes, I mean, these numbers are going to be looking, very, very good for Air South Africa. We're just waiting once again for the currency impact to go. Looking at the currency impact, I mean, we are going to be lapping the big devaluation in the Nigerian naira from February. So we're only about 4 months where this currency impact will probably go out of the system, and hopefully the numbers absolutely fly from there. If there is another currency devaluation, I probably would then go, you know what, I'm not waiting another 12 months for this to come out of the system, and then I'll probably go on to then probably sell the stock, I'd probably say. But we're only about 2-3 months now where the currency impact is going to be out of the system, and then we actually get to see the proper numbers from Air South Africa. And at the end of the day with Airtel is that they've just increased the dividend once again quite nicely. I think it was like a 8% increase on the dividend or 9% increase on the dividend. I've not fully read the numbers. I was reading this at like 7 a.m. and then I had about 1 million jobs to do, so I've not read the full report yet. But I think there was a quite chunky increase in the dividend, and at the end of the day, you're going to be picking up a 4% dividend while you wait for February, which isn't that bad at all anyway. So yeah, I thought they were okay, and hopefully that currency impact goes and we start getting the rewards from that one anyway. And that's the video for today, guys. 7 stock updates for you, a mixed bag, some that I own, some that I don't own. I hope you enjoyed the video. I'll try to do one on Sunday, which will be the UK stocks I'm buying series for November 2024. So I'll try to get that out for you guys. You guys on the Patreon, I'll try drop the UK portfolio review on Saturday for you guys, and then I'll also do the stock request on the Sunday for you guys. So on the Patreon, I'll drop 2 exclusive videos on there for you. If you do want to join the Patreon, link is in the description, £5 a month. You get those 2 exclusive videos a week. You get to know what I'm buying and selling in real time. As well as that, you get a Discord with 500 members on to talk about stocks, including me. And it's all £5 a month, which I think is pretty good. The price of a pint, I think it's pretty good value for what you get on there anyway. Hope you enjoyed the video, guys. Have a great weekend, and I'll probably see you on Sunday. See you in a bit.